Welcome to another real-time trade. In this video, I'll discuss several ways to manage the trade to empower you to design a trade management model that suits your unique mental wiring. This is the stuff of the real game. Now let's join the trade in progress. Hey guys, Czar here. Hope all is well. It's 10:07 a.m. We're on to the second candle, 30-minute candle of the session. Happy Monday to you. Monday, October 23rd. Watching things here. Mondays are always a little bit interesting, to say the least. And I just sent that note to my group. I'm always more cautious on Mondays for that reason. I sent out that warning before the session even started. But looking here for a potential zone break, guys, here on the NASDAQ right now, entering right there at the market. I'm going to put the marker on right now. Good, it pulled back, so that was my entry. Let me just double check. 45. Yeah, that's my entry right there, guys, on the NASDAQ. Stop below. Stop below. First target will be 1 hour. With a trickier target at 2 hour eventually. Let's see if we can get there. Zone break trade, guys. Zone break trade. A little funny because it is extended, but at this time of the day, I'm okay flipping my coin there. There's 1 hour. I'll put you on pause, guys, and I'll cut out dead air, sideways grinding action, non-teaching moments, things of that nature, and keep this nice and tight in terms of video. Zone break trade, impulse up on the in the pre-market, big drop, guys, big drop here on the opening candle of New York. These are New York constituents, and then a violent rejection. So fresh buying came in here, not just on the NASDAQ, but also, watch this, on the S&P. See that there? And on the Dow. See that there? And so we've been seeing the same thing on all three of them. NASDAQ, though, I'll pull them back a little bit here. This might not be a go. This might be a loss to start the day. We'll see. I'll put you on pause for now. We'll come back. And target 1 has been hit. And so the 1 hour all or nothing trader has exited the trade with full profitability. And the other traders, of course, are sitting around to see what happens here. The 2R move stop to break even at 1 hour has now moved their stop to break even. So the worst case they will get is a 0. They will get a break even or a 2R, and they're just going to sit and wait. So let me explain what this trade's all about in as much detail as I can give you. I know that the feedback has been that you really appreciate when I give as much detail as possible in terms of what I'm thinking in my mindset and what have you. Here we go. So we have a bearish daily overall. This has been a bearish X number of days here on the NASDAQ and the S&P and the Dow for that matter as well. This is Friday, this blue candle you see. Now we had a bearish candle coming into the session here today. This sell-off here during the UK session. That's Europe session behind. That's Asia, Europe, right? Selling off and created this very important intra-day support zone. We then rallied from there into New York. New York started very weak, all the way down, slammed down into that support zone, and then got rejected violently. Buying interest came flooding in for whatever reason. I don't have to know why. Quite frankly, I don't care. But it wasn't just the NASDAQ. Let me show you this. The same thing happened. So there's the NASDAQ at the support zone, rejecting violently. Same thing happened on the S&P. Same thing happened on the Dow. Almost identical structure. That, to me, was a very bullish sign, a bullish shifting sign. I start getting interested in longs. Coming back to the power grid, and then we had this pushback into this zone and beyond. And finally, the first candle, the 30-minute candle, actually closed. So broke and closed. Let me show this to you. A break and close into a fresh range, a new zone, if you like, beyond my zone marker, but more importantly, or equally as importantly, beyond these three rejection wicks. 1, 2, 3. all three of which happened before the New York session opened. Different participants than here in New York. New participants came in, drove the market down, and then for whatever reason, the entire U.S. trading market turned bullish very suddenly. So with that break and close beyond these wicks and into a fresh zone, I waited for the pullback to create a bottom wick on the next candle and simply bought the break above. Right? There's no guarantee this is going to go all the way up here. The reality is my 2R, my extreme target here for the model, is actually beyond the zone that was created in Asia. It might not get beyond that, but we're going to let the model play out and see what all four of these models would have done. 3 targets, but 4 models. And we'll discuss that as this thing plays out. And so there you can see it. Another important thing, of course, is VWAP. We had broken and closed on the 1-minute chart beyond VWAP, above VWAP, above VWAP, all 3 of them. So a broad consensus in the marketplace of this bullish move. Bullish moving average configurations above VWAP. So the 9 is above the 21 on all 3, not just the NASDAQ. And I entered on breaking of structure that happened above the volume weighted average price. So again, rallied up, closed, pulled back, and then broke structure above VWAP. Same thing happened here on the S&P. Same thing happened on the Dow. Pretty much the same thing. It's a little tiny bit different here, but it doesn't matter. This is actually even more bullish, quite frankly, on the Dow. So you get the idea, and that is saying go long. Now, I'm not convinced this is going to continue to go much higher. We'll have to see what the market offers. But so far, the 1R all or nothing trader has been fully profitable. The 2R move stop to break even has moved to break even, is locked in a sure break even, or a 2R depending on what the market does from here. Reality is, with this bearish overall trending bias on the daily, it's difficult to take a long here into a fresh zone, especially after this big move up leading into New York. But I'm simply denying those impulses and following what my model tells me to do. It's very difficult to do. The moment I got into this trade, here's what you don't know, because all you hear is my calm tone. What you don't know is, oh, this thing can't possibly stretch up even to 1R. How's it ever going to get there? I mean, look at this extension and so on and so forth, right? These are the things that all traders have to deal with. It's the mind game. It's the impulses, and it's impulse control, the real game of trading. That's what this is all about. Now we sit back, we watch to see what happens. We manage the trade the way we know we need to do based on our proven model, our proven mathematical edge. This is a game of probabilities and managing impulses. Back on pause for now. And target 2, 1.5R has been tapped, and so the 1.5R all or nothing trader has exited the trade with full profitability. Let me just say something here, guys, from a practical standpoint. Just thinking about the various models and how you may be trading your setups, and your setups may look something like this or quite different. But from a money management and a trade management perspective, let's say you always run or typically run a 2R all or nothing model, or a 2R move stop to break even at 1R. A situation like this, where we've just at 1.5R just run into fairly key resistance. Maybe there's room to make a judgment call and say, well, today I'm going to take this at 1.5R instead of just being rigidly mechanical to the model, where the 2R is just outside of this zone and prices may or may not actually make it. Now I'm going to run this to see what happens here, but I just wanted to throw that out to you as a idea for consideration, that maybe you have 1 or 2 rules where you are permitted, so to speak, to take profits at a different level. If in fact key structure, for instance, or time of day, we're at 11:01 right now, not really material at this point, but is a factor, and then potentially making a decision on that basis. Back on pause for now. And we finally did it, guys. 74 points, I believe it is. Yeah, 74 points on the NASDAQ here. 2R has been hit. Now, I will say that 3 of the models made money, and 1 of them was break even. So the 1R, 1.5R, and 2R, all or nothing traders, all made their full profitability. But the 2R moved to break even at 1R, got 0, right? Because here we go. Prices rallied to 1R. That trader moved their stop to break even. prices pulled back, stopped them out of break even, and then eventually went to hitting targets. So the 2R move stop to break even at 1R is a more comforting model mentally or emotionally, psycho-emotionally, but it's not necessarily the most profitable, and that's a trade-off that all traders need to make. And of course, there are many different combinations of those models. Now, just to recap, what kind of trade is this? This is a zone break trade. You see it here? The break and close into a fresh zone, pull back on a bottom wick. That's the wick you saw. This move back right here, and then a break above into the fresh range. Now, why did I take that? Well, if you remember, prices sold off all the way through the UK session till about mid UK session, 5:30 this morning, New York time. Then eventually put in a reversal move. I wasn't trading that, but prices rallied up and then went sideways into the open. On the open, prices drove down aggressively and then hit a very powerful double bottom here. Now, it's hard to see this as a double bottom when you're looking at a long wick like that, but that's precisely what it is, and rejected violently. Now, it wasn't just the NASDAQ that rejected violently, it was also the S&P, and it was also the Dow. So there was a concerted effort across the board to go higher. Now, I'm looking at longs and taking this zone break signal very seriously. Was it tough? Yes, it was. Remember that pullback here, for instance, and then some more sideways meandering stuff here. But eventually it paid off. The momentum was, in fact, strong enough to get there. Difficult to sit with, but being able to imagine the future is a big part of what trading's all about. You get your setup, you need to imagine that it's actually going to play out the way that it sometimes does, if not often does. Certainly not always does. And that's the important clincher. Thanks for being with me here today, guys. I'm sure we'll see you again a little bit later. Thank you for clicking the like button and for saying hi in the comments. I do appreciate you. Have an amazing afternoon. We'll talk soon.